Hello, everybody. Stocks staged a pretty ugly sell-off late in the day, but stocks were overall weak all day. A slightly gap down, consistently stayed that way. Stocks never traded above where they opened on the major market averages, and then they kind of just shit the bed in the final hour, for the last few minutes. I don't remember the last half hour, whatever. But the bottom line is that the market continues to not look good. Now, yesterday was a soft neutral signal in the S&P 500, Nasdaq, and Nasdaq 100. However, normally when my models switch, I go on StockTwits and I announce to the StockTwits community of our model switching. Yesterday I didn't. And also, while I might have mentioned it in the video, I know for a fact I didn't mention anything about that in the new positions page. Why? Because it's holiday trading week. I really have a tough time believing any rally here, especially as we go toward the recent resistance levels, and hence now you have today. So while it is a soft neutral technically for the Nasdaq, Nasdaq 100, and SP 500, I'm mainly operating like the entire market's under a sell signal still. The reversal today puts the index at 46.52 on the Nasdaq 100. That 46.52 is barely above where we opened the day before on the gap up. So if we completely fill that, I don't see why taking out the December lows will be right around the corner. And if that puts us below the 200-day moving average, I gotta probably need to learn to grow some balls and get ready to short this market because this market's looking really, really, really bad. Looking at a monthly chart, you notice after volume starts to go lower on this index from 11 to 2014, now we're starting to see above average monthly volume again, and we're starting to see red bars again. So, this is not good overall. It just doesn't look that healthy, guys. So, don't get too excited on thinking that, we're going to start the new year with a bang. The NASDAQ also was down 0.82%. By the way, I apologize, everybody. I have a slight cold, so I don't know how clear I sound. But that index is also looking very weak. The S&P 500 was down 0.72%. Getting it back below its 50-day moving average. Big trading range that it's in right now. The good news for the bulls is that volume was lower today, so it was not a technical distribution day. However, once again, the most disappointing data set that came out of today's session is the Russell 2000's lagging again. Down 0.94%. It's definitely a leader. The good news is that its relative strength line isn't hitting a new short-term low, but back here in December, it already hit a new low compared to its low in October, but yet price hasn't made a new low. So already got ugly negative divergence, and we've had that consistently since June, which is about, so all of our gains basically this year happened in June. They petered out obviously as we went along, and then we started to get gains again from the October lows to like the November highs. But as you can see, the relative strength line in the Russell 2000 craters to a new low, hence why our drawdown in our portfolio was bigger than the drawdown in August. I mean, look at how much more relative strength weakness there is in the Russell 2000 since those August lows, yet we're above those levels on the Russell 2000 by how much? Like by about 4 or 5, 3%. So what's crazy is that we're up 4% from the August lows, but the relative strength line has cratered since then. That's not good. It's a very, very, very thin market. And that's why the NASDAQ 100 line, you can see how it leads. It's not healthy. That's kind of how the 2000 bull market ended. Dow Jones Industrial Average since the August lows is leading, but yet the Russell 2000, the index that you want to see lead since the August lows, is cratering. Not a good sign to go along with, oh God, I bet you I don't remember what it is. Oh, I do, the advanced decline line. So let's get the advanced decline line up. Going back there. And you can see it too is well off its highs. There's still no positive divergence. It's going to have to get above these late November highs before, I mean, you can even get excited about it. But as you can see also from the April highs, it's had a lot of weakness. It's down 3% from the April highs, while the NASDAQ 100 from the April highs is up 5%. So, it's a very thin market, and I don't think it's healthy. And the action we saw today late in the day, how we just swoon after just hanging around all day, is a sign that there's more internal weakness than what a lot of people see out there. I mean, you can focus on Google all you want, which is fine if you're short-term trying to make money. I mean, that's fine. Google, Amazon, and Netflix. But if you're somebody like me that likes to hold stocks for a little bit longer term to make more of a bang for your buck, so you're not monitoring these kind of positions all day. Now, intraday, focusing on the small cap stocks is great. This morning, guess what two stocks I said to focus on? Short side FXCM, Boom, 1 point rub 24.77. By the time it broke down, by the time it started free fall, it was above its 20s. Now it's closing at 18.48. This kind of reversal with that kind of volume suggests that it's going to go back at least into this area, the 12s. So there's a lot of potential downside. So intraday, you want to short the bounces when you start to see them roll over using those recent highs as your buy stop levels, and or as soon as it has a couple of low series of lower highs and breaks to new intraday lows, you want to go short there. Also shorting if it goes green to red. There's a whole bunch of patterns that work for these pump and dumps, supernovas, which is what I would classify this as because it's trash. But wow, FXCM worked out perfectly today. And then the other one I said to watch is the only one the day trading community was on was VUSI, and it jam packs higher 18%. I would now start to expect to watch for a reversal on that one. So now I'll start to be looking for a short signal in VUSI. But once again, short-term day trading, that's it, man. There's really nowhere else to go. Long-term isn't working. Intermediate term isn't working. Short-term isn't working. Only intraday. So if you're a trend follower, you're going to have to be in cash, for a while. There's just too many ugly patterns. And whenever this is one of the best stocks out there, that's not a great sign. And why I say that is because UVSP is a new long position this evening. It's can slim quality, but it's not huge can slim quality. I think its EPS and relative strength are both around 75. But what it does have going for it, it was in both of my BOP scans. It was in my max green BOP for 5-day scan and my green BOP for at least 20-day scan. It's pretty good whenever you get a can slim quality stock in that scan, in both of these scans at the same time. I mean, that's excellent what you want to see. But normally there's a stronger market. So I'm not sure how this will work. But the good news is first sell stop, I believe, is 2060. Yep, 2060. Second one's 2041. So the loss, I mean, even if you don't get out of any of it till it hits 2041, you risk less than 3% on the trade. That is why it's going to be 1% for can slim. 0.5 for one BOP scan, 0.5 for the other BOP scan, for a total of a 2% long position. But once again, it's not perfect at all. That base is not long. Let's look at this. Where's my 10 and 20-day moving average? The best bases with max green BOP and BOP come with both a pocket pivot point signal, which we don't have here, and a volume surge. And it also comes with the 20-day moving average, 10 and 5-day moving average, all touching the price, or at least being very close. And as you can see, the 20-day moving average, kind of close, but not that close, and is still trailing down. It hasn't coiled, turned up yet to where it's even trending higher. So on that 20-day time frame, it's not quite lined up. But this is the best chart pattern out there right now. Remember, everybody, I flagged ADAP yesterday, and in the chat room I said I should go long the stock despite the low volume. I mean, the risk is clear, but you know what? The low volume, I have a feeling that, this one can base out a couple more days, and then maybe I can set a buy stop on it. Nope. Immediately up 7%. But look at which way the BOP went, down. So once again, that's not a sign of a truly strong market. The stock should have surged, BOP should have stayed max green, and volume even on this move today, it isn't that impressive. Closing at 12.18. It's technically still below those highs, 12.20, where the big reversal price bar is on that huge volume. So that could easily be a top also. But the bottom line is that I missed out on the 7% gain because I'm trading a little scared here. But I'm following the rules. It's a great chart pattern, but the volume isn't above the 50-day moving average. But it seems like in this tape, lower volume's better than higher volume. So whatever, it is what it is. The short signals are better tonight, though. FXCM, continue to watch that one intraday, but also OESX. That's a pretty damn good short signal, and so is T-Log. But I want to see the indexes downtrending more. But I tell you what, now that we're under a sell signal, I'm starting to focus and I want to see how these play out, see if these start working. If not, and if they do, I'm going to start hitting some of these. But T-Log, OESX, those are more trend following short patterns. The problem is that you always risk them being bought out in a huge gap up. That's why I don't like to short those stocks as much as I like to short these stocks that have already run up huge. VUSI, though, start to be looking for a short in that soon. Not today. Soon. Maybe by the end of the day, but it closed strong, so not a short yet. But FXCM, that's what I'm looking for.